Future Now show. Brought to you by the Club of Amsterdam.
A warm welcome to the viewers of the Future Now show. You can find other publications and shows on the website of the Club of Amsterdam and on YouTube. My name is Mario de Vries and I'm your host today. We are very pleased to present to you today no less than 4 top minds in the field of cryptocurrency. We have Mr. Peter Maissen, Mr. Hardy Schloer, Mr. Chris Skinner and Mr. Rohit Talwar. And we may have some viewers in the chat who are welcome to comment as well. Gentlemen, we are aiming at a 40-minute recording, which will feel to all of you like 20 minutes. So please keep your elaborations reasonably limited in order for the viewers to keep track of the discussion. We ask ourselves today, quo vadis? Where is it going with crypto? When the disciple Peter asked Jesus, quo vadis? Jesus answered, I'm going to Rome to be crucified again. So the main question today is, are we going to be crucified? Or even better, do all roads lead to Rome? Peter, on your LinkedIn, you say, we path the future of virtual assets. Please tell us more about what it is that you do and how the trading platform works.
Yes, thank you very much for the introduction. So let me introduce myself a little bit quickly and then Bitclear. So my name is Peter. I'm in the financial field since more than 35 years. 5 years ago, I switched to crypto business. So I joined Bitclear AG, based in Liechtenstein as a CEO. Bitclear AG is a fintech company specialized in cryptocurrency-related services. We offer a range of customized solutions, including crypto exchange. We have a license for that. We have payment gateway solution and software as a service for financial institutions. Bitclear's expertise actually lays in the bridging the gap between traditional finance and the crypto world, helping businesses integrate digital payments while offering top-notch security compliance standards related by Liechtenstein's Financial Market Authority. So, but before we begin our discussion, please allow me to give you a little historic background about cryptocurrencies and blockchain technology in general. The technology basis for cryptocurrencies is blockchain. Blockchain technology was firstly conceptualized in 1991 with the idea of a cryptological secured chain of blocks. Today, blockchain technology is being used across almost every industry, including healthcare, real estate, supply, logistics, insurances, of course, finance, banking. And there it's used for smart contracts, regulatory compliance, cross-border payments, asset management, and digital currencies. However, the blockchain technology became widely recognized when, with the creation of Bitcoin in 2008, when Satoshi Nakamoto published the Bitcoin white paper. This was the first practice implementation of blockchain as the underlying technology of decentralized digital currency. But from my point of view, one of the primary motivations was to create a system of money that wasn't controlled by any central authority, like governments or banks, and could operate independently of traditional finance institutions. Other facts are increasing transparency and security, lower transaction costs, of course, financial inclusion, and technology innovation. Going back to cryptocurrency, nowadays there are more than 10,000 cryptocurrencies on the market. So the number changes constantly. The most popular are Bitcoin, Ethereum, Ripple, and Litecoins. The current market capitalization of all cryptocurrencies is about $2.4 trillion. this figure shows an increase of over 115% compared to last year. BTC continues to dominate the market with a market cap of 1.3 trillion. So digital currencies, particularly cryptocurrencies, are often debated regarding whether they can be considered real currencies. There are several aspects to consider. Crypto, the characteristic of the currency, legal status, use cases, etc. So while digital currencies share some characteristics with digital money, they do not fully meet the criteria of real currencies in the traditional sense due to limited legal recognition and acceptance. Their role as an alternative form of currency, however, is growing. So cryptocurrency are used for a variety of purposes today. The most common applications are payments, remittances, investments and trading, smart contracts, asset tokenization, decentralized finance, gaming, and identity management and security. So let's go quickly a little bit more in details about payments. When we talk about payments, we have to distinguish between bank transactions and card transactions. So how long have credit cards been around? Actually, 1950, Diners Club launched the first credit card, followed by Bank of America with the American Express cards 8 years later. This was the start of Visa. What card schemes do we now currently? Visa with a market share of 38% is the biggest one, followed by Masters, American Express, Discover, JCB, Union Pay in China, and Diners Club. The global purchases volume in 2024 will reach 49 trillion US dollars. It's an amazing number. I have to count the zeros. It's a number with 12 zeros. So for all of us, it's very convenient to pay by card, but what about the risk? So we have different kind of risks. Let's say fraud risk. The fraud risk is an average is 0.1% in Europe, but I don't want to bore you with all the numbers. Basically, the technology of card payments has not changed much since the introduction. So they have measures taken to reduce the fraud rate, implementation of EMV chip cards or 3D secure protocol or strong customer authentication. So as of 2023, the global volume of online card transactions has grown rapidly due to the increase in e-commerce. The total e-commerce transactions globally reached over $6.1 trillion and are projected to grow by 10% annually. So the share of online payments globally made with cryptocurrencies remain relatively small with 1%. So what makes cryptocurrency payments so special compared to fiat transactions? Actually, they are much faster, they have lower transaction costs, increased security, global accessibility, privacy, and decentralized. But now, after all these numbers and historical view, here's my thesis regarding cryptocurrencies. Cryptocurrency payments will surpass fiat currency transactions by 2035 due to increasing digitalization and adoption, technology advantages, and regulatory clarity. So now, let's discuss this deeper.
If you allow me, Rohit, one of the topics that you researched are the implications of crypto for businesses and governments. Can you comment on what Peter just told us, or tell us a little bit more about the implications that you foresee coming? Oh, your sound is off.
You'd think after 2,000 of these. Can you hear me okay?
Yes, yes, excellent.
You'd think after 2,000 video calls, I'd get the muting right. A few things there. Very interesting talk, Peter. I think the nature of forecasts and predictions is we know they're wrong. We just don't know in which direction. And so we're seeing lots of predictions. We saw all the predictions about the size of the metaverse economy and things. A lot depends on the underlying mechanisms here as to whether crypto-based assets as a means of exchange could exceed fiat. One is societal adoption. And right now, it's still a very small community worldwide that are willing to invest the time and effort to understand how to trade with crypto, let alone purchase. It's still very scary. It's not as easy to trade, even on Binance. For me to buy or exchange a token isn't as easy as for me to go onto IG Index or Robinhood and buy and sell a share. So we have to make it really, really easy. And that leads us to, well, where do people place most of their trust? And it tends to be in traditional financial institutions, in the Apples of this world and the providers of the devices we use.
Gold.
So I think a lot depends on to what extent those people get into the space and make it easier. And then they're all looking for a profit from this. So you've got to find, I think one of the big challenges is finding a way of reconciling this for the big financial institutions that have a total domination of financial markets, for them to feel like they can still make money out of this at 1,000th of a penny transaction fee. I think the next thing is we'll see blockchain, as Peter mentioned, that will just seep into the economy without us knowing it. More and more businesses and institutions will discover the value of using a blockchain architecture for what they're doing. When you add AI, you speed up the underlying computing infrastructures, you get better and better blockchain algorithms, you'll see it being used more broadly, but we won't hear about it. I think there's a couple of really interesting things for the future that are most exciting for me. One is when people wake up to the idea of tokenization and what it means to take a real world asset and break it down into tens of thousands or millions of underlying tokens. So for example, to take your home and to take €100,000 home and to break that into 10 million 1 cent tokens. So I might own some, the bank might own some, but then anyone can buy tokens in my home in a marketplace. And that starts to allow people who've been excluded to suddenly get involved, where they can, every time they make a purchase in the shops, let's say they buy a coffee for €2.95, when they can opt to put that 5 cents into tokens in a fund that invests in property, suddenly you start to have the basis of changing their prospects. So the underlying technologies, the concept of tokenization, I think moves us into a whole new space. And then finally, you will see more governments, I think, playing with this, but that's because most of them want the idea of knowing more and more about our behavior. So with centralized, crypto, being able to know what we've spent our money on, where we spent it. If you're a diabetic and you choose to keep buying chocolate, will we know that? And will we then basically tax you more because you're placing more of a burden on the state? So there's some really interesting things that start to happen when you get widespread adoption, when governments get more involved, and then when corporates get involved. If big corporates decide that actually a way of locking you in is by giving you tokens rather than loyalty points, and those tokens can be used elsewhere, then you start to lock in more and more of the trading in the global economy into your organization's business model and your financial ecosystem. And so we could find that if Disney start doing that, not just the money I spend at Disney, but 5 to 10% of all my other purchases end up going through Disney. That starts to change the game in quite interesting ways. So those are just a few thoughts for me about where we could go with this and the possibilities. None of those are predictions. Those are all ideas and possibilities of what could happen with this technology that also keeps evolving.
Mhm.
The big challenge, as I say, is user adoption. The other is techies working in this field, like in AI, feel that the more complex we can make the language, the more obscure we can make the concepts, and the more we can try and make us ourselves look like geniuses, the more powerful this will be. That's quite the reverse. The easier we can make it, the more likely it is that our ideas will take hold in the marketplace.
Yeah, you are addressing different topics. Let's stick a little bit to this social coin. I know for a fact that it's already almost 15 years ago that in Moscow, when you paid your taxes in time, you could get credits for free parking. Chris, if I may ask you, why didn't this social coin take off, or what do you see as a preferred strategy for tomorrow?
Well, I mean, one of my big themes right now is around trust, transparency, and transactions. And it's all about what do you believe in? And some people believe in decentralized networks, social coins, cryptocurrencies. Other people say, no, I just want my money in the bank and to make sure that I have it regulated properly and that I can get revocation, repudiation, and get my money back. So we've covered a lot of ground in what Peter and Rohit's already mentioned, but I think the core of the where we're going question is that the internet needs a currency. And we are now all networked together. So we need a networked currency, which is one of the ones that are the mainstream ones as referenced. In my view, Ether is probably more likely than Bitcoin to be the currency of choice for business. Bitcoin and its brethren, because there's many spin-offs, more likely to be the choice of the citizen and consumer. And the whole reason why that's important is that it's a network currency governed by the people. And the regulatory piece is the real piece where, as Rohit referenced, we're going to see an interesting movement, because I'm seeing a number of developments, particularly amongst mainstream institutions like JP Morgan Chase, BlackRock, Capital, and others, along with ETFs, exchange traded funds, and the SEC and the Fed Reserve and others saying, we believe that these are currencies that can be traded. They just need to be regulated properly. And that's where the fluidity is right now, because we had the massive collapse of FTX with Sam Bankman-Fried. We've had Mt. Gox. We've had a number of others. In fact, the Quadringo, I think, was a Canadian exchange where the chief executive died in India, and he was the only person who knew the password for the exchange for the traded coins. So what we actually need to get to is a regulated marketplace that is global, networked, decentralized, but at the same time, someone you can call to get the money back. And that's where I'm sitting with trust, transparency, and transactions, because I don't trust anyone who's going to take my money and could just disappear with it. Why would you do that? And I've been suckered into those schemes in the past. I've tried to avoid them. At the moment, I think I'm in another one, but that's another story. It's about property investments. And it's all about your assets, which are now both physical and digital. So it's really trust, transparency, and transactions. How can I make sure in a networked economy that if I'm using a network currency that has no governance, that I can get the money back?
It's all of you published books and articles about these global scenarios, and I love all of them. Hardy, I know you as a leading mind in collaborative collective intelligence. What can you add to this, to the thing that Chris is saying about trust and how people work and finance their assets?
Okay, let me say this first. I'm not an expert in cryptocurrencies. I never owned any cryptocurrencies, and I might in the future, I don't know. And at one point, I was involved in the tokenization of knowledge to hook that up with a crypto project, but that didn't apparently happen. So I didn't pursue it any further. However, what I do is I analyze megatrends. And I analyze social trends, political trends, technical trends on a very large scale and on smaller scales. And what I want to add to this whole discussion, I don't want to get into all the technical stuff because you guys are covering this just perfectly. But on a big scale, there is a tug of war going on amongst all kinds of different trends within society. One of the trends that has really deeply interfered with the flow of commerce is the very stringent KYC and AML regulations that have almost incapacitated in some instances the free flow of commerce. Now, I think that these regulations only to a small part actually do what they really should be doing, capturing rogue transactions, tax evasion, money laundering, all these kind of things. But to a very, very large part, they inhibit actually the free flow of commerce. And I think crypto is moving in, the more it gets regulated, the more people go to cryptos in order to circumvent these things. And obviously, the government is looking at this with a very sharp eye to see where should we move in the regulators, because obviously the whole tokenization of assets. And by the way, the tokenization of assets is, and I agree with whatever you said earlier about that is happening. This is a huge trend, and that is an unstoppable trend. I predict that in 10, 15 years from now, in order to buy groceries, you're going to need grocery tokens. And in order to buy metal-based products or cars or whatever, you need specific types of tokens that you are trading and earning and so on. And this will be a completely AI-regulated economy of the future, because in that way you can really enhance some of the sectors that are lagging and curtailing some of the sectors that cause inflation by overheating and so on and so forth. So tokenization is something that absolutely is going to happen. But back to governments and back to regulation. Governments have a huge problem. They have two problems. One, how do we regulate crypto and tokenization in order to prevent fraud, in order to prevent money laundering and all of these kind of things? But then on the other hand, governments have an enormous problem, and that's called public debt. Whether you want to believe this or not, or whether you think Santa Claus exists or not, but we are facing a runaway debt crisis that can no longer be in any way solved, in any kind of way, on any tools that we have to solve that with normal economic means. The interest payment of the United States this year, for the first time, the interest payments, only interest payments on public debt, is $1 trillion. It is absolutely clear that we are facing a crash of our global financial system that is based on a fiat central bank regulation and methodologies. The government's looking at virtual currencies and a switch into virtual currencies, and crypto is nothing but a virtual currency, as an opportunity to move from the current system into this other system, and somehow in the process figure out how to make all this debt go away. And there's a lot of discussions going on. We're picking up on a lot of papers that are being published in particular circles, a lot of language that is out there right now being traded on all kinds of levels, in academia, in geopolitics, in central bank meetings and so on. How do we move from system A to system B? And crypto will, or some form of crypto and tokenization will be the answer that will be emerging over the next 3 to 5 years.
Yeah, but just to interrupt you, Hardy and Mario, there's a spectrum of what's happening, which is obviously governments want to keep things centralized. So that's the reason why they're doing central bank digital currencies. And we haven't touched on that yet. So that's a very important area that we should touch on, which is replacing fiat currencies with digital currencies that are distributed by banks or directly to citizens, depending on which country you live in. Stable coins, which sit in the middle of all of this, which is where you have a basket of things that are tethered to the digital currency, such as Tether and USDC and others. And then completely decentralized libertarian currencies, which is where crypto is mainly focused. And what I find interesting is that the reason why governments are massively concerned about cryptocurrency is it can completely undermine and usurp the system. It can go around governments. It's global. It doesn't recognize borders. It doesn't recognize regulations. On the other hand, as I said earlier, the fact that it doesn't recognize governments and regulations means that it's very easy to get scammed and duped into doing things that you shouldn't be doing and wasting real money on digital money. So
that's the tug of war I was talking about. Exactly.
Yeah, and I think that this is where we are right now. So how will it play out long term? In my view, it will end up with the financial institutions and the governments absorbing crypto into their systems and giving you the choice that you either sit in the Wild West or you sit in a regulated structure.
I could follow up on both what Hardy and Chris have just said. Firstly, I'm going to pick up very quickly on the idea of debt. Debt is only an issue if some people believe it is and others don't. If we just accept globally that debt isn't an issue, we can default on it. Who suffers? It's only the institutions that hold that debt and the people who have the money to put it into those institutions. The bulk of that debt isn't real because it's fractional reserve banking. So actually, the number of people who really suffer if everyone just said, we're going to default on our debt would be relatively small compared to the pain we've got now trying to service debt. The second thing the point I would make is whenever we talk about tech and these things and innovation, we forget, well, I think for me, we tend to forget two big things, which is that people are inherently lazy and governments are inherently slow and ill-equipped to deal with change. So I think what we see is that people they might trade in tokens, or they might buy groceries with grocery tokens, travel with travel tokens, but they won't know that. They will have an intermediary. Their personal AI will do all that. And it's most likely that the intermediary behind that will be the credit card companies or their replacements. Today, they already do that. They take your money in euros, they give it to a vendor in yen or to someone in pounds. And they'll do the same thing. You already see what MasterCard and Visa are doing. They're setting up to be able to do that, to be that intermediary layer. And I think there'll be more trust in that. And secondly, governments are inevitably going to be led by what the tech companies tell them is possible and what they're willing to do. So right now, very few governments are in advance of where AI is going in terms of their legislation. We're legislating for the last war. So we're legislating right now for ChatGPT when it came out 2 years ago. We're not legislating for where it's going and even for the possibility of artificial general intelligence. And so I think you have to factor these things when you have these conversations that, again, the ideas are brilliant and we all love having the ideas. The technology will enable a lot of these things, but human adoption and government's ability to actually make these things work for society in a way that doesn't get too many people being left out or being punished or risking being duped, as Chris said, it's very limited for governments to do that. And the cost for government of doing this is going to get higher and higher. And inevitably that will see them pushing more and more to the private sector to do on government's behalf. And therefore the private sector demanding more and more control over how these things work. Already we see that Nvidia and Microsoft are bigger than the GDP of most countries. And so their power is immense here. And we have to sort of really take account of what they want, what these big tech players who kind of run our world want, and the pace at which they want it to move. Right now, I don't think any of them have a very vested interest in seeing crypto take off quickly, in seeing crypto adoption take off quickly. They're very happy making the kind of money they're getting. Microsoft's share price has gone up 50% since GPT was launched. Nvidia's has gone up 5 times. They don't need crypto. It's a nice to have when they want it. And I think we have to remember that the rest of the crypto community, you add it all together, and it's less than the market cap of Microsoft. And so we just have to kind of remind ourselves that these things are like the slowing hand, people's laziness, government's slowness, and the tech companies' dominance. Those three, I think, still determine where things go.
Peter, would you be willing to comment?
Yeah, I can agree with all three gentlemen to a certain point, up to a certain point.
It's interesting to know where you don't agree.
But no, what Chris just mentioned, yes, of course, cryptocurrency need a strong regulated market. Otherwise, nothing will survive, So we need strong regulated market, number one. Then number two, we have the technique. We have blockchain, we have the technique for creating coins, etc. And nowadays, the civilization is highly digitalized. So everybody has a phone, everybody has a gadget in the hand where we can use, where we can spend. But the question is, and what's the value of the coin? Everybody can create, or a tech company can create a coin, but what's the value behind? And that's what Hardy mentioned. We have a debt problem, we have a financial problem, and if we cannot solve this, I totally agree. We run in the next big crisis. But then I ask myself, shouldn't it be better to go back to the gold standard? To digital. Now we see, or we have seen in the last few months or years maybe, that certain countries, I don't want to name the countries, but certain countries, they buy all gold on the market. That's why the gold price goes up. What is the reason? Yesterday in the news, maybe, you could see who would introduce, which countries would introduce a new currency, a new global currency, maybe to get rid of the US dollar dominance. So this is actually what I see will happen in the future. And cryptocurrency, never mind what coin, if it's a new coin or Bitcoin or another existing coin, is stable coin, but this new, let's say, global or digital currency must be backed up somehow with something, you know, you can touch. It's not just an idea or you know, an illusion.
So you raise a question there, Peter. Sorry to interrupt, but I'd be interested to hear Hardy, Rohit, and Mario. You know, 2050, is the US dollar still the reserve currency of the world?
No,
No.
no.
Yeah, I don't believe it as well.
I think the currency of the at least near future, distant future is, and when I say distant future, I'm talking about anything beyond 7 to 10 years. But of the very near future, I think the currency is 1 gram of gold. For a number of long reasons. This is a very long discussion. Why?
Hardy, if I may ask, the trading in Bitcoin has come to a halt because people are turning towards gold for their investment strategy. And Hardy, you are an expert in understanding and explaining contextual circumstances. What other contextual circumstances will influence the public investment sentiment?
Yeah, I will tell you what it is. Right now we are, I don't know, this didn't come up in this whole discussion here, but for those that don't read the news at all or live underneath a rock, there are several major wars going on in this world. And these wars seem to not have any possible resolution. This creates a social insecurity across the whole globe right now. I live partially in Southeast Asia, partially in the Middle East, partially in Europe. So I'm dipping into all of these societies. I talk with people on the street. I talk with taxi drivers, and I can tell you this: the general fear, existential fear of the future is rising dramatically. And whenever existential fear is rising, people try to get back to something they can hold on to. If you look, I mean, if you look at the Talmud, the Bible, the Quran, to whatever old books there are that people been reading for thousands of years, the only money ever mentioned is gold. And somehow that is something that is in the consciousness engraved of people. And I think that as the trends of social insecurity are rising right now, I think a lot of people believe we will have nuclear war before the end of next year, possibly even the end of this year. And this is a serious concern amongst a lot of people, whether it's warranted or not. It doesn't matter. It is what people believe, and as one of you said earlier, you know.
But there's 2 or 3 nuances to what you're saying, Hardy, because what I find interesting is if you look at the charts of Bitcoin in particular, price and gold, they've been relatively parallel in terms of movements. And equally, we haven't mentioned oil, which is another commodity that in business is very much something that people track and trace, which also is very closely aligned with the rise of the price of gold and crypto. So surely now we have more assets that people want to invest in, including digital assets, than just gold.
Yeah, no, I totally agree with you. I'm just saying that, and this come after heels, will the dollar still be the world reserve currency in some years from now? I think people want to get out of fiat currencies, and what you just mentioned, none of it is a fiat currency. And people, I think, even the dumbest of us understands now that fiat currencies are a bad thing. So we are looking for alternatives. And for those that
It depends on what you, sorry, I mean, to interrupt, but it depends on what you mean by people. I don't see many people I meet saying, I want to get out of fiat currency. Equally, I don't see many people talking about doing their daily shopping using their gram of gold. There's things about the mechanisms here.
you're talking
Dollar,
about today.
fiat currency, all those things are very easy to use now because we all understand them. And I think if we're going to get away from currencies like the dollar as being the reserve currencies and the core one, I feel like we're going to have to move to something else that's as granular. I can't give over a fraction of my gram of gold. Most people don't have it, don't even know how to buy it.
But what
So
you're
it
getting at,
feels to me that
Rohit,
we
is
might move more towards
You misunderstood
digital
me.
assets where I can trade 1/zillionth of a Bitcoin and pay
what
for
you're getting at,
things.
Rohit, is the difference between a trusted store of value versus a trusted transactional system. And
For most people, they're the same, aren't they? The store of value and the
No, they're not.
transactional currency.
Gentlemen, I see that Peter wants to say something for some time now, so please do.
So, but Roy, we have the solution actually for paying with gold. You can tokenize the gold, and then you can pay with this token. Let's say 1 gram of gold equal, let's say $10 or whatever.
Bingo.
Well, that's what I'm saying. It's going to be a tokenized asset of whatever form.
Yes,
Exactly.
so
Just to Chris's point, yes, we as the kind of intellectuals in the space will debate very freely the difference between a trading currency and a store of value. But to most people, their pound is what they do their savings in, and it's what they do their payments in. They don't divide between the two and say store of value. It's only us who are kind of in the talking sphere about this that see that. And I feel like that whatever comes next, whether it's gold, whether it's oil, whether it's some sort of crypto asset, it will be tokenized. If we're moving away from fiat, we're going to move to something that's tokenized. And it may be that what I contribute into that is my collection of Chelsea football programs, my store of 18th century Delft pottery, and my signed photograph of Donald Trump. They might all be assets that I put in order to get tokens back, some of which I might consider a store of value, others of which I might consider as my transactional currency.
apart from the signed Donald Trump photo, I agree with you, Rohit. But I think we can all agree is tokenization of assets, digital transaction, and digital store of value. And the tokenization is the key core of where that's all coming from.
Absolutely.
Yes, totally agree on that.
I'm so sorry, but I already have to ask for final statements. And we didn't even talk about mining and congestion of the energy grids. Let me start with, I think Peter would like to end the session with the final takedowns. So let me start with Rohit. Is there something I should have asked, or what would you like to address or emphasize?
I'm not sure about what you should have asked, but for me, this whole conversation has really kind of highlighted the absolute need for education, for society to both understand all these asset classes, to understand what we mean when we're talking about these things, to understand the challenges. And I feel that's a very big conversation at a general level that's missing, but also in our schools in particular. I think raising people's understanding of these things, how the monetary systems work, why they might be under pressure, what does it mean to have tokenized assets and tokenized trading platforms? I think that becomes an essential part of the curriculum and society's education, because we are moving to a much more technocentric model of being. And if we don't have that education, then we're going to have a lot of people being left behind.
Thank you so much. Chris, if you would like to follow up on that.
I think when we're looking out into the next 10, 20, 30 years, we've all agreed that fiat currencies and governments are going to have to adapt and change dramatically to a global world that's connected. And it's going to be very difficult for them to regulate that. It's going to be very difficult for the world to operate in a new network way. But that's what digitalization and digital transformation is all about. For the average person, not the brains in this room, but the person who is referred to in UK law as the person on the Clapham omnibus, they don't give a flying flamingo. I mean, it really is basically, where do I put my money? Can I trust where I put my money? Can I get my money back? And I always come back to, the big tech companies who we, again, didn't touch on because we didn't have time, but Amazon, Apple, Google, what's their phone number? How do you get hold of someone who can rectify an issue with the transaction? If I'm honest, Amazon are pretty good at that. And I think they will play a major part in the future world of transactions and commerce. Apple is not as good. And Google, I haven't got a clue how to contact them.
Very nice. Hardy, please.
So I think what we all agree on is that we are facing a completely tokenized future.
Absolutely.
How this tokenization will transpire, that's up for grabs. We will have to see which of the models is going to win. I think we also can agree on that there is a move from fiat currencies into something else that has a better possibility of continuation into the future. So I think given these two major trends, I really think the future is some forms of virtual finance, of tokenization, and that's it. I think we already in the process of that. And someone earlier said governments are slow and people are lazy. Yeah, these two factors are absolutely true, and they probably inhibit the smooth transaction into that future. But there is no doubt that future is about to happen.
Peter?
Yes, so what is left to say? I don't want to repeat all the statements from the gentleman, but just from my personal point of view, I think the digitalization of our time and many processes has just started. And now we scratch on the financial field, the digitization scratches on the financial field, money, payment, investment, etc., etc. And we have the technology, in blockchain, etc. And as we know, time is changing. You have the problems around the world, different kind of problems, and it will all these problems will boost actually the cryptonization of things and will change many processes much faster. So I think we'll face a very interesting future in the next few years. And for anyone interested in cryptocurrency, please contact bitclear.com. I look forward to helping you to take another step in the digital world and become more familiar with cryptocurrency and tokenization.
Yeah, it's I would have loved to talk to all of you another 2 hours, also about the implications when Satoshi Nakamoto is found, what it will do with the trust in
Mario,
coins.
I don't know if you know, but Satoshi Nakamoto means central intelligence in Japanese.
Yeah.
Just saying.
And yeah. So Unfortunately, we have to end this session. And to the panel, I would like to my sincere gratitude for sharing their future thinking with us today. A profound thank you to you all, and also to the viewers of the Future Now show. And we hope to see you all next time. Thank you so much.
Thank you, Felix.